friends, it's your girl Cha Cha reporting live from The Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So if you are a new or returning subscriber, welcome, and I'm so happy that you guys decided to click on this video and watch it today. I have a lot of content specifically geared towards beginners, just helping you understand what is the foreign exchange market, how does it move, and giving you some practical tips on becoming a better trader. Now, you don't have to be a complete beginner, but it does help to really understand these fundamental concepts and to put them into practice. I have so many different playlists on specific things like market structure, candlesticks, entry points. So if you're curious, explore. And if you don't find what you're looking for in the quick videos section, just leave me a comment and I'll make sure to add that to future videos that I make. But in the meantime, if you find yourself coming back to this channel or you like this video today, don't forget to subscribe because it not only helps you, but it helps the channel grow. It helps to push it out into the algorithm so that other people can find it and we can continue to elevate and be profitable together. Now, in today's quick video, I'm going to be showing you guys a quick pending order strategy that you can use so that you don't even have to be in the market when your trades trigger. Now, I know a lot of people tend to be a little bit intimidated by trading because you have this sense of FOMO and you don't know when to get in, you don't know when to get out. But I'm going to make that process a little bit easier for you, showing you how to set a particular type of pending order so that you can catch the move and your trade can trigger even if you're not actively in the market. Now, that sounds like something that you're interested in. Make sure that you stay tuned to the end of this video to get the best of this example. So the first thing that you are going to want to do, and I'm just going to put the chart in replay mode so that we can analyze what happened after this point. Now, no matter which time frame or asset you decide to trade, you're going to want to start off by checking the news just to get a macro idea of what's happening in whatever market you decide to trade. Because believe it or not, the news does influence the market in a big way, and you don't want to be caught off guard. So after you've checked the news, the next thing that you want to do is identify any significant highs and lows that you can see. And a significant level or a key level would be an area that you can obviously see the market has some type of strong reaction before. Now, here I highlight it because the market was coming off of a strong buying trend, and then it just hit a stop and it pushed back down, but it didn't go down so far. And when it came back up, it actually came to the same area of resistance. Now, this is important to highlight because we can see that even after the market sold and consolidated and came back up, it hit the same area of resistance again. Now, an area of resistance again is typically found at the top of a buying trend, and a sell is usually what follows. Now, this is important to note because when the market sells, most likely it's going to be selling back down to another significant level or a place where you can see the market had some type of reaction. So all I'm doing right now is highlighting those key levels where I can see the market had a strong reaction to a sell or a strong reaction to a buy. Now, if you can see that, again, just drop some sevens so I can know that I'm explaining this correctly and that it's actually making sense. Now, the type of pending order I'm going to tell you about today is called a sell stop. It's one of many different ways that you can manage your trades, and it's a pending order that occurs when the market, your entry is below the current market. So let's say that this was our sell stop, and then your TPs are still below. Now, this is different from market execution because if we were to get into this trade for market execution, we would either buy or sell no matter where the price was, and we would set our parameters based on our actual entry. A sell stop is you're choosing which price you want to enter the market in because you can see that this is a significant low. So once your trade reaches that level and triggers, if it continues to sell, your take profits will also be below that point. Now, this is important because you can see within 5 minutes, we've already identified those key levels, we've marked up our charts, and we've set potential areas for take profit. Now, you can use these same levels as entry points. So as the market falls here, this will be your first sell stop, and this will be your first TP. Now, your first TP can also be your second sell stop, meaning as soon as this trade closes at this price, another trade is going to be triggered because your first take profit is your entry point for your second sell stop. As that trade continues to fall, you'll have your TP1 for your sell stop 2. And again, this can be your second sell stop. So as this trade closes, another trade will be triggered at the same exact price. And then we would have a TP1 for our sell stop 2, and so on and so forth. But the important thing about this strategy is that it is for sells. If you can see that the market has reached a high or a swing high, and you've gathered other confirmations that create your bias for a sell, you know exactly where your sell stop should be, and you know exactly where your take profits should be. So let's just go ahead and see what will happen, right? And just remember that these lines are going to be sell stops and TPs. So as long as that level is hit, the strategy would be valid because these previous lows are being revisited, not only for take profits, but for future entry points as well. So we can see that our first take profit would have been hit and our sell stop would have been triggered. We can see that our all of our sell stops would have been triggered. And the only thing we would have had to do is analyze our market one time, set all of our pending orders, and just wait for these trades to trigger. So essentially, it's like becoming your own bot and automating your account because you've already identified the levels, you've already set your trades, and then you're just waiting for them to play out. And then we can see that in the course of about 14 hours, we could have secured about 100 pips off of a 5-minute analysis, a couple of horizontal lines, a little bit of patience, and a few pending orders. Now, if this video was helpful and it made sense, don't forget to subscribe to the channel because I did notice that over 70% of my viewers are continuing to watch the videos, but they're not subscribed. If I'm helping you guys, let's help each other. Let's continue to push the content, share this with another trader. You hit the subscription button and hit the notification bell so that you never miss when I post quick videos like this. But that's really all I have for you guys today. Until next time, rich friends.